Okay, welcome everyone. We're going to get right into the stock market technical analysis. We're all about finding actionable trade ideas that hopefully we can profit from on this channel. So if you guys are finding value in the content, if you're enjoying the channel, let me know. Drop me a thumbs up, leave a comment below, tell other people. It does help the channel, and this channel is all about helping each other. So we'll start off today with triple Qs. This is the tech sector. We've got what looks to be the start of an uptrend. Okay, and I did talk about in my live stream that I did yesterday that I'm starting to look for some bullish, I'm kind of starting to lean more bullish on, especially tech, really more bullish on tech. Still bearish on energy stocks, but bullish on tech, bullish on gold. That's really what I'm looking for. So we're going to point some trade ideas out for what I see today. Triple Qs, a couple things, if I look at the daily chart here on triple Qs, and I know this looks like a mess, but bigger picture, we've got this bearish rising wedge. This is support right here. All right, that's big support. And so far, as I zoom in, you can see we held that support. Resistance was previously right here, and we're just walking down. We did have a breakout and what it looks to be like a breakout and a back test, and now we're going to continue to break higher. So I'm looking for a rally, guys, and I am long triple Qs. Looking at the hourly chart also, you do have this slight bearish rising wedge pattern here on the hourly, and it's right about there. You can see that, and then the bottom is down there. We broke out today with a gap up, and so far holding strength, kind of flagging out, looking like it wants to make another move higher up to fill this gap right here at 288.60. Okay, so I think that's actually the move. We might even get it today, but looking for that up to that 288.60 on the gap fill. Probably get a pullback at that level, and I am starting to mark out what this potential uptrend line here. All right, so here's what just to make it very simple and brief, I think we are going to continue to rally, fill the gap, get a little pullback, hit this trend line, continue, run up, fill the gap here, maybe get a pullback to the gap fill, and just continue to actually trend upward in what looks to be like the start of a bear market rally. All right, so that's the way I'm leaning. Again, most recently, and just you can see it on the hourly chart right here. Let me kind of clean this up, but you'll see most recently we had bullish divergence right there. See it on the hourly? We've got it right there, and we've got it right there. So that sets us up for a high probability trade of a rally. Okay, so this was your low, and then there's your new low, and that's your divergent low right there. So bullish divergence oftentimes will indicate a trend reversal to the upside. And so far we're seeing that in the price. So we got to go with the charts, and the charts are telling me rally time, or at least more of a rally. If this fails and we just sell off or gap down, and we take out the divergences, then that will kind of foil this whole picture. But as of right now, we're looking bullish. Same picture on the SPY hourly. You can see here the bullish divergences that have been building for a little while. On both momentum indicators, we were drifting lower, made a new divergent low, and we're kind of gapping up and looking like we're about to continue to rally today. This one has a little more work to do. You've got this potential trend line here to watch, and we're just at that point where we could break out, but we haven't broken out yet. So I suspect they hold it here today, and maybe we gap up tomorrow in the SPY, or it gets rejected. All right, if it gets rejected, you've got a gap fill area down here to watch, probably right about there. So you sell down. That's your next objective area to buy on the SPY, is right there at about 369.20. But again, for me, I'd want to see a breakout. I'm more interested in the triple Qs for a trade, but I do want to point that out on the SPY. And the small caps, again, this is just an hourly chart, so we're just looking at relatively near-term price action, but bullish divergence here on the hourly. Okay, so we were drifting lower. We've got a trend line to watch here. We got a rejection, and we're right there at resistance. So we need to break above that in order to to confirm that this is a breakout. But if you get that, I think you're going to start filling these gaps. All right, IWM has some gaps to fill. Oh, no, I don't need that tool. You got a gap right here at about 178.50 and another gap there at 183.60. So I think you run up and fill both those gaps if we get that breakout. At resistance right now, but we have that bullish divergence. So Q's looks like it's starting to lead to the upside with the breakout that I just showed you, and maybe these things will follow. Okay, trade ideas. Roku. All right, we'll go to the daily here. Roku, big bullish falling wedge here. All right, we've been compressing. We had a breakout once before, and it was a false breakout. But again, we have another breakout today. So that's a buy signal as far as I can tell in Roku. Roku has had bullish divergence. It's been building for quite a while here on the daily chart. So this is signifying a pretty substantial rally, all right? And it would make sense, all right? Roku has sold off from the high down to the low, basically 85%. So to see a 30, 20, 30, 40% rally, it's completely within the parameters of how this thing moves. And we have a breakout and a buy signal today. Now we're at near-term resistance. We're right there at 89.20. We got to get through that. So we might just consolidate and kind of chop around for a little while. But it is a breakout. So unless it falls back into this, back below this trend line here, then I think we just consolidate here and then continue higher. Okay, Carvana. A couple things about Carvana. All right, most recently on the daily chart, we put in a bullish falling wedge pattern. We have bullish divergence. It's been building. All right, momentum's been building to the upside while price has been drifting lower. And today we do have a breakout. All right, a gap up 6%. They rallied it pretty high. It's coming in for a back test. So if I look at the hourly, this was your former high right here. All right, we got some resistance. It was support there, kind of a reaction level. And you can see we broke out on the first hour of the day and we're drifting down back down to support. So I suspect they'll close it right here, about 25.41. But that should be support. So I like this one as well. Actually, I did take a starter position on this on Friday. It looked like it was breaking out. So today gapping up, and that's looking good. I think you probably want to add on at a tag of the support if you even get it. All right, this thing's looking bullish. Where do we go to? Well, if we're going to have a substantial bear market rally, flipping back to the daily chart, we have a downtrend to watch here on the daily. And you can see resistance. We could rally all the way up to there. And, I don't know how long it would take, but potentially a rally of 150%. And that would still just be a bear market rally because this isn't a bear market. It's down substantially. So again, it doesn't mean we can't get strong rallies within a bear market, and that's what I'm starting to see, at least in this one. If we fail and we just sell off, I don't suspect it would sell off right here. I think you probably are going to go a little higher and then maybe sell off, but we'll be quick to flip. Just keep your stops, keep stops in, manage risk. Don't load up on any one position, especially in a bear market. You don't want to load up when we're trading a bear market rally. If we're going to get that, you don't want to load up on any one position. You want to kind of spread it around. So just keep that in mind. Okay, oil stocks. So DVN, this bounced obviously off support on Friday. I talked about that being at support and how I covered my short position. I'm not going to reshort it here. I think there's maybe a little more upside. I'd be more interested in reshorting it right up here about 62. Maybe we don't get that, but I'm more interested in shorting it on bounces into resistance. And we're kind of just in the middle of this range right here. So nothing there. I still think we're heading down to the 200-day. Maybe we bounce up to that 62 and then roll over. So that one's kind of just, but XOM looks good as a short. So XOM, let me show you the daily here. On XOM, ExxonMobil, you've got basically a trend line to watch here. All right, we've got 3 reactions. And then we had a sell signal on Friday, big sell signal. Today, they're gapping it up and running it right back into resistance. But again, that's the objective area to short at. So we do have a breakdown or a sell signal and a run back right back into resistance. So I am shorting this one right here. I like that for more downside. Same thing on this one, EOG. Some oil company basically. It's doing the same thing. You can see we had a sell signal on Friday, breaking trend. So there's your bullish trend here. All right. Sell signal on Friday, and today, just a back test. All right, back testing the trend line. So it's objective to short right there at that trend line. Doesn't mean it's guaranteed to work out. They could recover the trend line and continue to build on the gains, but it's objective at least. It makes sense. The probability says it gets rejected here and heads lower. So this one minimum at least the 200-day. I think we roll over down to the 200, probably quite a bit lower, but for now we'll just watch this 200-day, which from where it's at right now, that's still another 10%, almost 11% down. Okay, gold, no real change in gold at the end of the day. We're still seeing kind of the same consolidating price action in gold, holding support, but not going anywhere. Just, I'm looking at a lot of these stocks. They're all kind of holding support and just sitting right there on support, chopping around for the last, month or so. So I'll keep you guys updated if I see anything new. I think it's a buying opportunity here at support. We have the charts tell me that looks good, but at the same time, we're not moving. So, okay, something that's also interesting today, DVA. So this is a basket of agricultural commodities. We've had a bullish trend in this thing really since the beginning, midway through 2020, and that trend has not been broken. So here's your bull trend here on the daily chart, walking up on DVA. This is really part of the inflation factor, is the fact that the raw inputs, the commodities, have been getting higher and higher. You can see support all through here. There's support, and most recently, boom. Friday we broke this trend, but we had previously broken it, so it's not quite enough information. And then today, more selling. That's 2 selling candles in a row. Now, we have had that in the past right here, but usually you get that once. The way I'm looking at it is this was actually maybe your original sell signal. You had a back test, and now you're getting rejected. So I'd be looking for, if you want to give it the benefit of the doubt, what I would probably do on this one is look for the lows, the most recent lows, to get taken out. So as I zoom in on the hourly chart here, you can see right about there, which is pretty much right where we're at now. I'd like to see these get taken out. 21.53. You get those taken out, and you're probably going to have a correction in these ag commodities, which likely will help bring in the inflation reading. That's kind of what the market's anticipating, basically, is the fact that inflation's going to come in a little bit and the Fed's going to be able to ease off. And I think that makes sense from my perspective as well. The reason being is, one, I know that the Fed cannot raise interest rates that much. So rather what they would do, what they need to do, basically, not what they'd like to do, but what they really absolutely need to do is walk the markets lower, which is what they have done. If you really look at Qs and SPY, we haven't really had a crash. We've been walking lower. A crash is something like COVID, like this. Straight down, huge drop. That catches institutions off guard. That catches everybody, pension funds, all off sides. And ultimately, if they're not bailed out, they break and fail, and then you have more systemic economic problems. But if you walk the markets down in a more orderly fashion, that gives the institutions opportunity to position. All right, and that's what they want to do. They want to walk the markets down, easing off the inflation, really pulling money out of the system from the consumer because their stock portfolios feel, like they've been drained, and so they do that without allowing a crash. And then that allows them to, then inflation reading will maybe start to come off a little bit. And then that allows them to ease back on their interest rate hikes. They cannot raise interest rates that high. The math just doesn't work. It's like a wall of resistance, basically, in terms of math. So, they might talk about wanting to raise interest rates really high. And I think that's all part of the game, right, is to scare the markets with talk, come out really hawkish, walk the markets down, let the inflation reading come down, and then back off on your interest rate hikes. And the end result is the interest rates never really got hiked that high. That's the end result. So that's what I think is going to happen. We're starting to see weakness, obviously, in the ag commodities, and these things are due for a correction. This has been, this is kind of a crowded trade now. It's been, the best trade of the year for sure. Last few years, really. So I think we're probably due for a pretty decent correction in these things that will last maybe a year and a half. And during that time, inflation should, come down a little bit. It's not going back down. It's very likely that inflation is going to go back down to 2% and the interest rates are going to be higher. I think we'll continue to run negative interest rates. So inflation might come down to like 5%, 4%, something like that, and stay there. It'll bottom there and continue to run higher than expected. So we're going to have waves of inflation over the next, decade is really what I'm thinking. That we have, the market will sell off. We'll have, inflation will come off a little. The Fed can then back off on their interest rate hikes, and then inflation will start to build again, and it'll pop up again here in the future. But that's kind of how I see that playing out. I could be wrong, but that's just kind of my thesis there. Okay, I'm gonna go ahead and wrap it up, guys. Just to review, if you guys are new and you're interested in learning this as a skill set, learning this as a technique, how to read the charts, how to take high probability trades and keep your risk reward ratio good, then take my stock market technical analysis course. I put that in the link in the description below. That's available for you guys to take. It's not free, but it's not expensive. All right. I think there's a really good value there for what I'm charging. I don't want to give my time away for free, but good value there. So check it out if you're interested. Next up, what I'm looking at is shorting oil stocks. Still think those need to come off a little bit, and that's part of that inflation trade coming down. That's a big part of it, actually. So shorting those oil stocks. Long certain tech stocks. I'm not long all the tech stocks, but triple Qs. I've got a position in Roku, and I have a position, slightly small position in Carvana, and looking for some other ones. I don't see that many yet, but they definitely are. They have good setups. There's definitely some setups out there. So looking for a few more buy triggers. I'll let you guys know when I see them. And then long the gold stocks, because if inflation's going to come off, then the Fed likely will back off on those interest rates, and falling interest rates or easing off the hawkishness should be bullish for gold. So we'll watch for that. All right, that's what I got. I'll catch you guys on the next one.